Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Reinick, and I'm joined this week by Nina Mishra, and we have a couple top stocks, and mine actually dropped. It went from a Zacks number 1 strong buy to a number 2 buy, but that's okay because when you take a look at what's actually happened with the earnings estimates on this stock, you'll see why I picked it. So my pick is Occidental Petroleum, ticker OXY. And yes, this is the one that Warren Buffett's Berkshire Hathaway has been buying. They bought $4 billion worth of shares and now have a double-digit position in Occidental. Why is Buffett interested? Well, the stock is cheap. It's trading at 7 times. But it's really this growth in the earnings estimates that he's after. And because that is soaring, that also means their free cash flow is soaring. And he loves free cash flow as well. So let's take a look at what's actually happening with these earnings estimates, because it's been a while since I've seen some stocks in an industry that are this hot. Let's dive right in. So the first thing I wanted to look at again was those changes in earnings estimates, because it's been a long time, like I said, since I've seen something like this happening. So we have 2 estimates that are higher in the last 7 days for the full year and the coming quarter, because the analysts are realizing that they are behind. This is somewhat rare for analysts to raise going into the next earnings season. So Occidental expected to report earnings on May 10th. So we still have a couple weeks, but some of the other energy stocks are expected to report a little bit earlier, and those estimates are already being revised higher as well. So we have 2 being revised higher. They're looking for $1.69 now for this coming quarter. Just 3 months ago was at 89 cents. So you can see nearly doubling there on the earnings for the quarter. And for the full year, they're looking for 808 now. That's almost triple what they were looking for 90 days ago. Of course, that was before the Ukraine war and before WTI and nat gas soared to new multi-year highs. Both were already high, so things were already looking up for the energy companies. But WTI now over $100 for numerous weeks now in this last quarter and even into the second quarter here again. So that's going to push up earnings. And you can see the analysts are trying to catch up. They're trying to catch up a little bit on 2023 as well, because they realize, no, we're going to be way behind there. But let's not worry about next year. It's really about this year. And with this earnings surge, and the PE is now so low, that means the PEG is also low at just 0.2. So any kind of PEG ratio under 1 indicates both value and growth. So this is why Buffett is diving in, because you have to love this earnings outlook. This is also why it was a Zacks number 1, but now it's cooled off a bit to the number 2 buy. But I'm still expecting even further earnings revisions into May after these earnings come out. So I would not be surprised to see it, bounce back up to the number 1 rank in short term, in the next couple of weeks. But let's take a look at what that looks like on the chart. So this is the price and consensus chart, and you can see the huge surge there in that light blue line. That's the 2022, now surging up to 5-year highs on the earnings. 2023, that brown line is a little bit below, but also moving in the correct direction. What you don't want to have happen is 2019, 2020, right? Where we had the start of the pandemic, they shut down the rigs, production crashed, and so did earnings, along with the crude price and natural gas prices. So that is when you get the number 4s and number 5s, but this kind of setup is when you get the much stronger buys, because we want rising earnings estimates. And then let's take a look at what happened on their meets and beats. So they were missing throughout the pandemic, and even going into the pandemic, it wasn't good. There in 2019 and the start of 2020. And then they kept missing because crude stayed, even though it bounced off of the ultimate lows of the start of the pandemic, still was not doing all that great in 2020. It wasn't until the vaccine was announced in late 2020 that the shares got a boost and then earnings started to turn around. So last year, earnings started the upward slope, and we've really seen it here now in 2022 with WTI back over 100. These shares, however, look at them. They're not back even to 2018 highs. So that's something to watch, even though they've been soaring here in 2022. Shares are still attracted just 7 times, not even back to 2018 highs, probably likely not even back to the 2008 all-time highs. So we've got a ways to go for those people who say, oh, isn't it too late to be in energy? This cycle has only just begun, and usually the cycle lasts 4 to 5, even 6 years once it starts revving up. And so look for these shares to maybe see further upside and further estimate revisions higher on this next earnings report. I do expect this one to be a blockbuster, as do the analysts. That's why they're moving ahead of the report, but I still think they're going to be behind. So keep that in mind when you're looking at any of these energy companies. Occidental pays a dividend. It's yielding only 0.9%, but a lot of these energy companies paying special dividends. And so that does not show up on Yahoo Finance or anywhere else you're looking at the yield. So you need to tune in to what they say in their earnings report, and if they come out with a big special dividend in that earnings report, to really know what you're going to be paid out as a shareholder. So my stock's Occidental Petroleum, OXY, and I'm turning it over to Nina to give you our second stock pick, and hopefully it is not a number 2.
Thanks, Tracy. I'm Nina Mishra, and my top pick today is Deere. Ticker symbol is DE. It's a Zacks rank number 2 buy rated stock. And I like Deere because it benefits from the rising food inflation. And we know that inflation is currently running at its highest level in more than 40 years. And food index is one of the biggest contributors lately, and food prices had been rising with supply disruptions even before the war, and the Russia-Ukraine war has just made the situation much worse, because these two countries are major exporters of grains like wheat and corn and sunflower oil, and the conflict shows no signs of slowing down. So that is why Ukrainian farmers are now finding it difficult to tend and care for their spring crops. And many farm workers have even joined. They were forced to join. They are now fighting the war. Russia is also one of the major exporters of fertilizers. So, and in addition to sanctions on Russia, rising energy prices have raised production and transportation cost of fertilizer, and that also raises that is also going to raise food prices going forward. So food inflation is likely to continue, and with that, the farm incomes are going to be higher, and demand for agricultural products is also going to be higher. So that means there would be greater spending on agriculture machinery, and Deere is the world's largest producer of agriculture equipment. So let's go to the quote page on Zacks.com and look at some charts. So Deere, as I mentioned, is a Zacks rank number 2 company, and the industry rank is also in top 33%. The agriculture farm equipment manufacturing has a nice dividend yield of about 1% and trading at a reasonable valuation. Now, the company had reported excellent results, beating on both and top and the bottom lines, and you will see that analysts have been raising their estimates for the current and next year because of those excellent results. They have gone up significantly since the company reported results. Now, if you look at the longer term price consensus and EPS surprise chart, that you will see that they have not missed since 2022. Last few quarters since the agriculture product prices have been rising. Now, you'll be surprised to see that Deere is also a technology company. So it is one of the top holdings in ARC ETFs, ARC Autonomous Technology and Robotics ETF, and also ARC Space Exploration and Innovation ETF. And that is because the company is a leader in autonomous tractors. And with rising labor costs and demand for precision agriculture, I believe that these self-driving, autonomous, technology-powered tractors will be very much in demand. So that is another reason why the company Deere is worth a look. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe to our videos so that you do not miss anything, and we will see you next week.